Ms. Elizabeth Wong, Director and Head of Fintech Unit, Intermediaries, Securities, and Futures Commission. Dr. Haibin, Executive Director, Research of the Hong Kong Monetary Authority. Let us have a group photo first. Let us have one more photo. Thank you. Please take your seats on stage. Professor Lin, the stage is now yours.
Okay, so let's start out the first section in the afternoon. So first of all, I would like to introduce the panel. The Professor Barnett, I think he is now my colleague at Hong Kong U. Before that, he was the Chief of China Division in IMF Asia and the Pacific Department. And then we have Mr. Fred Ngan, who is a young entrepreneur. He's the co-founder of Bowtie Insurance Company. And then we have an expert, definitely an expert in this financial regulations, Ms. Elizabeth Wong, who is the director and head of Fintech Unit in the SFC. And finally, but definitely not least, we have Dr. Haibin Zhu. Haibin is an old friend, so I'm very happy to see him here. He's an executive director of research of the Hong Kong Monetary Authority. Okay, so with this, let me so my role today is the moderator, and I also look forward very much to learning from all of you. So let me start this conversation by throwing out some questions. So now the first question, I just follow this order. Okay, the first question to Professor Barnett. So starting from this year, now first of all, I give a definition about financial innovation. So in our discussion, I want to use a more kind of a broad definition, which means innovative finance or financing innovation, which means we know there's a lot of tech development, tech progress in the capital market. Okay. Starting from AI, chips, innovative drugs, aerospace, satellite, everything. So is there a better way or innovative way to finance this is also count towards today's discussion, okay? Now, so the first question here to Stephen is that, we know that starting from this year, I would say we see a lot of economic policy uncertainties, okay? If you look at the EPU index last year, that was probably the highest among the last 100 years. And coming to this year, just like 2 or 3 weeks, we see a lot of incredible, unbelievable things happening. So given this kind of, and the tension is not just kind of between countries, but even within countries, like within US, you see the tension between the government and the Fed, and also the federal government, the state government, all these kind of things. So with this kind of a macro uncertainty, what's your view about the financial innovation or capital market as a whole? So can you share some of the insights on that?
Sure, great. Thanks. It's actually, it's a great question. As a macroeconomist, of course, I think the macroeconomy is the most important thing. And in terms of Hong Kong's roadmap, let me give the answer first, and I'll come back to it at the end. I think building on Hong Kong's strengths, which are macro stability, and after the previous panel, let me add openness. That both of these are going to become increasingly important. And I know I missed the panel on the global economy, but since you asked a question, the bottom line is the global economy is not doing well, to put it bluntly. We're kind of stuck in low gear. Global economy never recovered from the pandemic. As of 2024, it was 3% smaller as a result of the pandemic. IMF just published updated forecasts. I still use IMF forecasts, raising growth forecast this year to 3.3. 3.3 is low. The 2 decades before the pandemic, global growth was 3.7. So upgrade from bad to not quite as bad. And I think the worst is the outlook. The outlook is for continued growth at around 3.2. The lowest growth we've seen in decades. And in fact, the 5-year ahead forecast from the IMF is the lowest on record. And then to come to your uncertainty, the uncertainty is clearly making it worse. And I think we know the problem. Prior to the pandemic, productivity growth had fallen. It's very econ speak for both lack of innovation, but really it wasn't innovation. Countries were allocating resources really poorly. And here's where I think the financial sector comes in. The financial sector is key in this role of better allocating resources to sectors. Trade is also key. And I think unfortunately for many advanced economies, and really advanced economies are the ones behind the global growth slowdown, instead of relying more on trade, we've actually seen a marked decrease in trade growth. Less trade just makes the economic pie smaller. I think we shouldn't forget our basic economics. Trade makes the pie bigger. We can fight about how to allocate the piece, but there's no way that with a smaller piece of pie that most people are going to be better off. And as long as the world continues to fragment, things are going to get worse. I think this comes to Hong Kong in my last remark. It's building on Hong Kong's strengths for macro stability in openness. And I often think of it in terms of Hong Kong's linked exchange rate system. It promotes stability, but actually more importantly, the conditions one needs to successfully maintain a fixed exchange rate, like Hong Kong has for decades, are exactly the conditions to create good macro stability. You need robust economic policies and institutions, Hong Kong has. You need to have ample fiscal reserves and international reserves. You need to have strong financial supervision and regulation, and you need to have a healthy financial system. These are all needed to support the linked exchange rate system. They're also needed to promote macro stability. And I think it also puts a premium on having really flexible labor and product markets, kind of economists speak for a good business environment. And that flexibility has allowed Hong Kong to maintain competitive. And just to give my very last point, a concrete example, one of the biggest problems for rich countries is high government debt. As a group, government debt is over 100% of GDP. And then you come to Hong Kong. Hong Kong net debt is negative. Hong Kong actually has fiscal assets. So I think Hong Kong is really well poised as a bastion of macro stability and openness.
Okay, thanks a lot, Stephen. Can I have a follow-up question on that? We know that if you look at Hong Kong's capital markets, especially the stock markets, so I would say super majority of company was coming from mainland China. So you think, what's your view on this, like the geopolitical tension? Because you talk about stability, right? So you think this kind of exposure doesn't bother us anymore, or we become strong enough so that we're immune to all this kind of tariff or other uncertainties?
Yeah, I don't think nobody is immune. I think everyone is being hurt, and I like to compare what's been the cost of the big shift in U.S. policies. And notwithstanding the upgrade, again, I use IMF numbers here. Since the U.S. election, the global growth outlook has gotten worse. Nobody is immune from a worse economy. But ironically, if you want to keep score, and the way I keep score, look at IMF pre-election forecasts. So from October 2024, and compare those to now. The whole world is worse off. US is worse off. There's one outlier who's actually doing much better than the fund thought, and that's China. I don't know that it's because of the trade war that China is doing better, but I think Hong Kong maybe is positioned to take advantage of it. It has a fast-growing mainland that's going to continue to offer opportunities. And as the previous speakers mentioned, this role as I used to think a gateway or a super connector. The mainland's going to continue to grow fast. You know, advanced economies grow at 2%. China's unhappy growing at 5%. There's just much more rapid growth.
Okay, so then I'll go to the second speaker, Mr. Ngan today. So, Fred, I know that you are young entrepreneurs, and your company Bowtie is now is one of the first digital insurance company. So, so can you give us some insights about how did the tech play a role in this insurance industry? Because overall, we know this is a pretty labor-intensive industry. We see hundreds of agents, and also is one of the fastest growing industry. But we want to know that how did the tech play a role or reshape the industry?
Sure. Well, thanks. Well, first of all, I'm not young anymore, and so I'm an entrepreneur. So I tend to think from a customer behavior perspective, right? And you talk about the innovation definition, and one way I see it is innovation drive behavior change. And if you look at insurance, it's an industry that hasn't really changed for many years. Like the way that we deliver insurance is through one-to-one, face-to-face, through insurance human agents. But at the same time, the behavior has changed. We used to see that people, when they consume information, they will go to Google, and now all of us are going to AI, right? One of the most common topic that people ask AI is health. People are very health conscious. People, especially new generation, they're very tech savvy. So how do we better serve these customers? So in our view is the insurance sector, the experience is quite outdated. If we can provide a direct channel so that people can access health and insurance information directly and instantly, it might be a better way to serve our customers. And in fact, it's a much more affordable because we cut out the commissions, we can streamline the approach, and also make it more transparent. Because one thing that we realize is a lot of information is not available. Especially for people in Hong Kong, they would like to make well-informed decisions. They need to be able to access this information. They want to make their own judgments. So we're providing control back to the customers so that they can make decisions. And so the entire process now with digital tech, with AI, there's so much automation, there's so much thing that we can make it so seamless. Instead of paying claims in days, now we can talk about in hours or even in minutes. So that actually create a lot of convenience for the end customers. And I fundamentally believe that it's an industry that there can be a lot of improvements, both from digital convenience and also the cost perspective. We are in the medical insurance sectors. We're facing very high medical inflations, double digit. And if we don't change that, that means some of the people may not be able to afford insurance. And we do have a very good healthcare systems. And in fact, it's kind of like a victim of their own success when it's so good that we kind of relied on the public system. But then for people who can afford it, hopefully we can educate them. Because what we learn is for behavior change, it's not just about cost and convenience. A big part of that is educations. But insurance education is so boring. That's why we have to create some of the more interesting video on YouTube, on content, on blog, right? Trying to make it more interesting. Because people genuinely care about the health, but how do we educate them in a way that they're willing to finish the video and so on. So there's a lot of changes going on. The way that we educate people is very different. It's not through pay advertisements. People don't like advertisements, so we have to find a way to educate them using a different way. So these are some of the learning that we have. And we have been around for 7 years. It's good to see that we have about almost 150,000 customers. So we are able to find a segment that believe maybe direct channel is more convenient, maybe it's more affordable. Of course, for insurance company like us, we need to be, we have to reach a certain scale. So we're still trying very hard, but the good side is we do see that the behavior is changing. And there's so much happening in the technology side that we might be the first one who figure out what the AI means and help us.
Again, a very simple follow-up questions. I think maybe you are not the first one who proposed this idea, because kind of digital insurance, this I think a long time ago as Ant Financial and others, they're also thinking about this, right? So what was the major obstacle? You talk about the bright side, but we want to have a full picture, like how to overcome this obstacle.
Yeah, this is a very good question. In fact, when we started, all the investors asked the same thing, right? The conventional thinking is insurance is sold, not bought. You need someone to sell you insurance. No one is going to buy insurance. And so when we started off, what we learned is, yes, you can put a product online, but people won't come. If you need to spend money on the advertisement, then it's way too expensive. Sometimes it's even more expensive than sales commissions. So how do we able to make it sustainable, right? So what we learned is we have to, what we call the unit economics, right? We have to find a way to make sure that the customer lifetime value is higher than the customer acquisition costs. And the way we do that is through organic channel. So we have to not just, because in Hong Kong, you see like thousands of advertisements every day. There's so many things going on. So we have to create engaging content. So what we learned is we can be turn ourselves into a media company. We can be so good at creating helpful content that we can dominate all the Google search, now dominate the AI search, and trying to create a channel that people are willing to spend time. So the way that we do acquisition is very different. It's more pull than push. And we find that for people who especially are educated, tech-savvy, they actually prefer it this way. So our learning is that, it's not just about putting a product online. A big part of this is education, and you have to find a way to do it at a very economic way, so that at the end you have positive economics, so that you can continue to do the next round of fundraising and keep growing the company.
Another thing I would say that other than education is the trust. So that's why people want to see. I want to see an agent, and I can talk to him or her, so that I have some more trust. How do you solve this trust issue? I think this is a big thing.
Yes, another great question. So people buy medical insurance. It's unlike buying travel or car insurance. People do care about the service. It's very hard for a startup like us to demonstrate trust. So in the early stage, what we can do is we borrow trust, right? Okay, we're backed by Sun Life, we're backed by Mitsui, we're a very credible investor with some of the Zhang Zhenhua, and people that you trust who are the figurehead who are willing to back us. So this is initially how do we build our reputation, right? And the second thing is for whatever things you search online, we want to make sure that it's positive. The online shopping behavior is very different. For people who buy things online, they care about all the comments. They will try to look at the forum. They will look at everything they can find online. Not all of them is going to be positive. There's some negative one. But if there are some negative ones, you have to be responsive. You were willing to step up and respond to it. And people trust you because you're honest, you're transparent. So I would say the digital way of building trust is very different from, you need to have a billboard across the harbor. It's about being transparent. It's about being direct in answering some of these complaints. And then the word of mouth is going to be important, but that takes time. So building trust is actually one of the critical things. It's not just about knowing your brand. It's about trusting that when something happened to me, when I'm hospitalized, I need to trust that you will take care of me. So that is important. We're in the 7th year now, so our trust is increasing. And I believe this is one of the key engines to drive the next wave of customer growth.
Okay, so because of time, I have to move to the next speaker, Elizabeth. So half year ago, I guess SFC is the hottest kitchen in the town. You receive hundreds of applications for the stablecoin kind of a license. Now I think it's a good kind of reflection point to look at this, and the second is that people are more interested about the way forward. So. We know that the recent news shows that in the United States, people are talking about the Clarity Act, which is an act that being withdrawn very suddenly before this, the reading. But then there's another one called the Crypto Market Structure Act. So we just want to understand, is there anything that SFC's plannings? So apparently, based on this, you can see people are still quite confused about the reason we call it clarity, which means people are still confused about the boundary of the regulation, what you can do, what you cannot do in Hong Kong. So can you share some of this, the progress with us?
Right. Thank you. So what we're doing in Hong Kong is we're completing the ecosystem, the regulated ecosystem in Hong Kong. So what we've started out in 2018 was that we saw that virtual assets, crypto assets, digital assets were here to stay. And then we also saw that there were a lot of investor protection issues. So we decided that we needed to regulate this industry. Back then in 2018, we were one of the first major jurisdictions to do so. Other jurisdictions were, adopting a wait-and-see approach, or they only decided to look at it from an anti-money laundering perspective, but not from an investor perspective. So what we did was that we put in all the TradFi guardrails that you can see in the traditional financial markets into the crypto market in Hong Kong. So we started out with regulating fund managers and also regulating crypto trading platforms. Then we ventured out. We created a bigger ecosystem whereby we allowed our licensed entities that were already licensed by the SFC to also start conducting activities in crypto, in virtual assets, in digital assets. So what we've done is that slowly, bit by bit, we've been creating a rather trusted ecosystem in Hong Kong. But what we see is that there's still a big picture that is not regulated in Hong Kong. That's one thing. The other thing is that what we see is that the ecosystem in Hong Kong that we've created so far is slightly closed loop. So crypto is borderless, and we can't stay closed loop. So what we're doing at the SFC right now is that we're completing the ecosystem. We're going to license more players in the market. So we've worked with the government. We've actually just concluded a consultation, so that what we're going to do is we're going to set up a licensing regime for virtual asset dealers in Hong Kong, and also those who provide custody services in Hong Kong. So that would complement our trading platforms licensing regime. And what we're also doing is that we're further consulting to also license virtual asset advisors in Hong Kong, and also pure virtual asset fund managers, which are not already regulated by the SFC. So this is the part that we're doing. We're trying to complete the ecosystem, make sure that every part is regulated. On the other hand, as I mentioned just now, right now we're slightly closed loop in the sense that our licensed corporations will partner with our licensed trading platforms and provide, dealing services to investors in Hong Kong. What we're looking is how do we tap into global liquidity? How do we bring global liquidity to Hong Kong? So we actually recently issued a circular which allows our trading platforms now to share an order book with their overseas affiliates. So that's the first step in tapping into global liquidity, linking it back to Hong Kong. And hopefully this will bring more trading volume back to Hong Kong, and also the liquidity. We are also looking at our existing regulations, whether we can allow our licensees to provide more products, more services. And in this regard, we've already allowed staking in Hong Kong. We also allow our virtual asset ETFs to also provide staking. So these are things that we've done. And in the pipeline, we're looking at, more products, for example, perpetual futures. Is that something that we can do in Hong Kong? We're looking at, do we allow margin trading, for example? So these are also all in the pipeline, and it will, we will try to do it as soon as possible, because we do see that there is competition around the world. And I think finally, I just wanted to add that in addition to investor protection, we're also focusing on the underlying technology. We think that the underlying technology, so blockchain technology, will actually also form, the backbone, the infrastructure of our capital markets. So it's something that we're also working very closely on in order to, see how we can freshen up our financial markets, the infrastructure, how do we make it more efficient, and how do we actually use the new technology.
Okay, Elizabeth, so if you don't mind, I want to come up with follow-up questions. You raised a very good point, so how to bring the global liquidity to Hong Kong. This is not easy. I remember you and I, we were at the IPO of the event of HashKey, a couple of weeks ago, and at that event, I actually invited Elizabeth to come. If I'm right, HashKey is not making profit yet, So, but at the same time, you can see that we have a lot of global competitors in terms of trading volume, in terms of size, it's much bigger and also much profitable. So, related to this, you mentioned about I'm happy to know that SFC is considering this the perpetual contract, because contract-based trading, in terms of volume, actually surpassed the spot trading. But then you have one kind of dilemma here is that whenever you use contract, of course, you have a higher degree of volatilities because you use leverage, and sometimes pretty high leverage. But then this sounds a little bit, maybe I'm wrong on this, but inconsistent with the regulation, which we also care about the sound and the safety of the investor. So how do you balance these two when you kind of regulate the crypto exchange, for example?
Right. So we're highly aware that our licensees need to be profitable for this to be sustainable. So we are aware that we do have quite stringent requirements, but I think we also need to look at profitability from a different perspective. One is because we're comparing them to unregulated platforms. We're comparing them to the Wild West. Of course, they will be more profitable. They don't have any compliance costs. They can do whatever they want to do. So I think for us, we are looking at how do we achieve that better balance in terms of perpetual futures. I think for us, first it must be investor education. So they need to understand what it means when you're actually, transacting on leverage. So the risks are higher. They need to know that their margin could be collected, right? And they might not actually get any profit in return. I think from our perspective as well, we're looking at how our trading platforms also properly risk manage this, because again, they are also, giving out this margin to their clients. It also goes to their profits. It hits their books. How do they manage that risk from, providing leverage to their clients? So this is what we're working with our industry right now. We're coming up with requirements so that both our trading platforms are properly risk managed, and also the investors will understand what they're getting into. And hopefully through that, we can actually have a more balanced approach, and also bring more trading volume to our trading platforms, especially since we do know that the perpetual futures contracts is actually more popular than the spot.
Okay, and also a very simple question to a very hot topic is RWA. So is there any new progress in terms of the RWA legislations or new regulation associated with that?
Right. So in relation to tokenization, the SFC actually has issued circulars back in November 2023 to provide guidance to the industry on, what do we expect our intermediaries to do when they, for example, distribute tokenized securities, or they actually are an issuer of a tokenized investment product, for example. So from the SFC's perspective, if you are a securities, if you use a securities wrapper for your RWA tokenization, then you simply need to comply with our existing securities laws and regulations. It's really that simple. For us, what we're actually looking at more closely is with the HKMA in Project Ensemble. We hope to be able to, educate the industry that you shouldn't be looking at tokenization from a product level. You should be looking at this from an infrastructure level. And that goes back to what I was saying, how we're looking at how the tech can support the capital markets. How can it be built into the infrastructure to make the capital markets more efficient? I think that's the goal that we have in relation to tokenization. So we've heard a lot of misconceptions saying that, oh, I want to tokenize something and then I don't need to follow any securities regulations. I don't even need to find a valuer to value the property that's underlying the token. But I think our capital markets have worked so efficiently so far. The fundraising aspect has worked so efficiently so far, and that's because we have all the safeguards, all the guardrails in place. So when you're talking about RWA tokenization, you can also go back to the capital markets model, think about it, how it actually applies to you in the fundraising, and I think it will be much clearer how you can do your tokenization in this respect.
I know we can go on with this for another hour, but I just stop here with just one small question: is what if the underlying asset is not a security? Say it's a precious metal. So is there any, can people do that?
Right. So from our perspective, what we've seen so far is that although the underlying asset is a precious metal, what we've seen so far in the market is that it's wrapped in a fund wrapper. It's wrapped in a securities wrapper. So what happens is that although the asset isn't a securities, the wrapper makes it a securities. So then again, all the existing requirements will apply. So that's what we've been seeing, and I think one of the reasons why people are choosing to use a securities wrapper is because it's actually very clear how the rules and regulations actually apply.
Okay, so first turn going to ETF, and then you can do that. Okay, so the final speaker is Dr. Haibin Zhu. And I think this is a good sequence because Haibin used to be the chief economist of JP Morgan China. So he can easily take up the whole hour to speak and non-stop. So he's the residual clamor, you know, so Haibin, so apparently based on your experience is that in the industry, before that you were at BIS, right, the multinational agencies, and now in Hong Kong MA as a research head, you know, so is there anything you want to share with us?
Yeah, so I still want to focus back to the topic for this session, right? The Hong Kong, promoting Hong Kong as an international financial center. So of course, when everybody's talking about Hong Kong as a financial center, two things usually pop up. One is that Hong Kong's advantage in terms of the institutional, the pro-market institutional arrangement. So Stephen also mentioned that like free market, free capital control, free capital flow, low tax, great university, right? Hong Kong yield a huge amount of talents. So these are the precondition for having an international financial center. I'm not going to spend too much on that. But another thing, when people talk about Hong Kong, of course, the super connector, that's the unique advantage, particularly if putting Hong Kong comparing to other international financial centers. But the thing I want to emphasize here is that over the decades, of course, Hong Kong has been benefiting, and also Hong Kong has been contributing to the Chinese economy through this super connector role. But we need to pay attention to the new trend actually in this super connector relationship, particularly given that in recent years the change in geopolitical relationship and also the global economic landscape. So I just want to emphasize three things when you think about how Hong Kong utilizes super connector role to further enhance the role of the international financial center. First one is that when we talk about mainland China, right, Stephen is very optimistic. I think that particularly in the last 12 months, actually roughly the same time last year, right, the DeepSeek, what we call DeepSeek moment, that significantly changed the market perception, particularly assessing the ability for China to deliver major innovation. Right, so I think that's important to keep in mind. And for Hong Kong, of course, that last year everybody talking about Hong Kong is back to the global #1 in IPO. But if you look at the listed companies, actually the advanced manufacturing, the AI, and the healthcare, these innovation sectors actually is the big part actually the IPO in Hong Kong. So I think that's the one that it is important to think about China's economic transformation and how Hong Kong can be supporting this transformation. The second point is that relate to the change in the international trade network. Right, so that's particularly true after the trade war. Of course, that under Trump 1.0 and 2.0 is a very different feature, right? The term 1.0 mainly the U.S.-China trade war, but then actually on the second term, it's become global. But that significant change actually the global trade network. I remember IMF has a very nice chart showing actually the changing the trade network actually nowadays versus say 20, 30 years ago. If you take Hong Kong as a perspective, China as a perspective, of course China's export to US or China's market in the US, share in the US market has been declining by roughly 40%. Compared to 2017. But China has been, we know that China export is doing very well. China's share in the global export has been increasing in the sense of the benefiting from the diversification efforts. So China export to the Belt and Road countries, so ASEAN, to Latin America, Africa, actually has been increasing very fast to offset actually the headwind from the US markets. So again, that putting Hong Kong in that perspective, I would say that the role of the international financial is also very important. Actually, the Hong Kong government has been rolling out initiative to support the Chinese companies going abroad, right? Not only the increasing the diversified export. But if you look at the FDI dynamics, actually in recent years, the inward FDI has been declining quite sharply into mainland China, but Chinese company overseas investment has been quite strong, right? Continue to be very strong. So a lot of the Hong Kong financial service and the professional service are really changing the gears to serve the demand actually for Chinese company going abroad. So I think that's the second, the changing trend. And the last one actually from the financial flow. Financial flow typically is more sticky, right? It's take much longer time for the international financial system changing. But I would say we start to see the emerging sign that this probably also happening. Right? Last year there's a lot of discussion about the de-dollarization. Probably de-dollarization is it's probably not happening now. It probably take time, right? But I think that given this the geopolitical the conflicts and the market start to worry about the sustainability of the existing international monetary system, particularly the US dollar as a safe asset, actually that status start to be reassessed. So we see that actually, if you look at the financial market, last year actually the dollar surprisingly weakened a lot, in sharp contrast to the market forecast at the beginning of last year, right? And also that, so you see actually euro appreciate double digit against US dollar. Gold actually is skyrocket to a new record high, and now market, the analysts talking about 6,000 before end of this year. So, but if you put in the global perspective, I'll say this reassessment on the international monetary system that start to also affect the international financial flow, right? So that what could be the replacement asset for US dollar? So euro as a second largest, and also gold as an alternative assets. So we are in the middle of this, probably the beginning of this, the new trend. And for Hong Kong, of course, the important takeaway is that what role can Hong Kong play in this new role? So in particular, Hong Kong is the biggest offshore renminbi market, I'll say, renminbi internationalization, that naturally will become another, I'll say, the very important pillar for the Hong Kong's market development. Of course, Hong Kong is now the biggest offshore market, but still we see there's plenty of things we can improve from there. We can improve, actually introduce new the offshore renminbi products, right? Improve the liquidity and also enhance the financial infrastructure, and that's exactly what the Hong Kong government and HKMA has been working in recent years. Thank you.
Okay, thanks, Haibin. Just like the previous speakers, I have very quick follow-up questions on that. We know that last year, the financial market, if you look at data, it's pretty good. The trading volume kind of doubles what we had the year before. The return, you just talk about it, including Hang Seng and also the Chinese stock market. But at the same time, if you look at the real sectors, the property markets, the consumptions, people feel quite different, from the capital market. Basically, there's a decouple. You can see a decouple, the link between these two. So, is there anything you can share with us on this?
So the question is on mainland, right? Yeah. So
including Hong Kong, I would say.
Yeah. Slight different actually. So for example, housing market, I would say that used to be both on the weak side, but Hong Kong's residential market start to bottoming up, but mainland China, I would say, is still probably on the downturn period. But yeah, I think when we look at the economy in the U.S., actually a very common wording people saying is a K-shape recovery. I think that K-shape also can apply for mainland Chinese economy, and we see actually very different performance, right? In the innovation sector, advanced manufacturing, AI, a list of the other sector we see actually they are performing very well. And we see a lot of entrepreneurs actually innovating in this industry. But in the conventional industry, housing is a good example, but also we're talking about, say, the old manufacturing sector, overcapacity, right, and the anti-involution now, the campaign. Of course, consumption has been very weak. But consumption is weak, I would say, is more, my personal view is more about the very weak expectation for future income. So yeah, of course, Stephen we can debate on this actually, or discuss on this for days. But there are different proposals how China can work out the weak consumption, so how to use a fiscal policy. And my sense is that the most important thing is that how to fix the expectation. Because if people has very low expectation on future income, then no matter say how government say the increase the fiscal transfer or subsidy, cash handout to the household sector, they will actually save the extra money rather than save it. But I think this represent actually the transitional stage difficulty. When you think about the, talk about industry upgrades, I think from macro perspective, that's perfectly right, because China is now actually rely more on the total, TFP, total factor productivity growth, to support actually the medium long run growth. No longer actually in the old days, like just the input actually the driven. So I think that's the natural trend. But how to manage the transitional pain, and particularly say how to manage actually the downturn pressure from the housing and other traditional sector, and when the new emerging industry still need time actually to take a more dominant role. I think that's the biggest challenge actually China is dealing with in recent years.
Okay, so and now we are getting to the final kind of a suggestion or sharing sections. So I just ask each of you, to basically to give us just one maybe suggestion about related to the topic, how to make Hong Kong more innovative in the financial landscape. So maybe I will start from Haibin this time. I was wrong that actually the stablecoin issuance was associated with MA. Sorry for that, Elizabeth. But then I read the news that MA is going to issue the license this year. I would say, but we know the market, the crypto market, up and down last year. But if you look at the payments associated with stablecoin, it increased quite steadily. And the recent data shows that the monthly payment already surpassed $1 trillion. So in this case, is it a little bit too late for Hong Kong, to catch up, or you are pretty confident that we can, find another path?
Well, I think that my first job is just from BIS, and that day one, actually, my mentor discussion with me is always about the risk, vulnerability, and the potential financial crisis. So I think that related to the issue of financial innovation, I would say the key word emphasized is responsible innovation. So I would say always the balance between innovation and the stability. That's a key, particularly from the regulator and the central bank perspective. I think that's so the market can, of course, focus more on the innovation side, but innovation shouldn't come at the cost of the public interest. So I think that in my career, like actually I have been observing, say, some very promising innovation, but because actually they are going too fast at the initial stage without actually the risk and control, and that actually end up being a disaster. But even for and then actually the backfire on this market itself, actually the market just simply disappeared. One example is the credit derivative market, right? Leading to the global financial crisis. And I still believe actually credit derivative is actually very good, nice thinking. But because of the crisis, actually these markets doesn't have a second chance. So same thing for internet banking in the mainland China. So I would say that being innovative but steady growth actually, I think it's still from the regulatory perspective, should make sure that we have the valid actually, the credible, the sound actually, the regulation system, to ensure the more sustainable long-term growth. Yeah.
Thanks, Haibin. Responsible innovation, and then Elizabeth.
I definitely would support responsible innovation. I think from the SFC's perspective, if we were to look at innovation, what we really want to see is how it's going to be used in the infrastructure. As I mentioned just now, don't focus on tokenized products, focus on the tokenization infrastructure. I think that's the key to unleashing more of the potential of the technology rather than just looking at it at a product level.
Okay, that's good, infrastructure. And then Mr. Ngan,
I think we need more entrepreneur. I felt that in Hong Kong we do have very good startups, and most of them are still in the first generation of entrepreneurship. But when I talk to my friends in Silicon Valley, a number of them have done it a few times, and some of the employee, they founded their own company that become ecosystems. Another point quickly is talent, right? I give you one example. We hired this actual student from Hong Kong U, and he's an actuary, turned into a data scientist, he turned into a software developer, and now he's in charge of the AI and cybersecurity and so on, right? And I think for innovation, when we are doing new things, there's a lot of unknown. So it's less about the insurance, less about the experience, it's more about explorations. So we need people who are constantly learning, curious. So the strong raw talent is very important, and how do you learn quickly to pick up new knowledge is very important. So I would say more entrepreneur and more tech talent is going to make a big change.
Okay, so we can take care of the second part, but for the first part, how to cultivate this kind of entrepreneurial culture? This is is there anything missing in Hong Kong right now?
I feel like sometimes people look up to example. When you see, I feel like one of the reasons why we see more and more Chinese startups is because there's lots of example. They look up to, right? People
Role models.
And then then they follow.
Okay. Good, Steve?
Sure, I think I find myself always agreeing with Haibin, but I really like the responsible innovation. And when I joined,
macroeconomists think alike.
We do, for better or worse. When I joined the IMF decades ago, the joke was IMF stood for it's mostly fiscal. Almost every crisis was a fiscal crisis. Then the global financial crisis came, and the IMF said, no, it's mostly financial. And I think when we think about as a result of that, actually, the IMF started to do very deep dive into all prominent financial systems. We call it the FSAP. We like acronyms. And IMF, World Bank, a bunch of experts, and a bunch of outside financial experts. And I happened to be running the Hong Kong team a decade ago when the second one was done. And what we said at that time, to paraphrase, was that it was me speaking because I wrote it, but this is the IMF speaking, was that basically Hong Kong was at the forefront of many areas of regulation. We did another one in 2021. I won't read the quote, but didn't quite use global forefront, but basically same assessment. And I think that when we think about financial innovation, it's how do you do it responsibly? How do you stay at the forefront and balance these risks? And to go back to your very, very first question, I'm a big believer the global economy is doing poorly because of weak productivity growth. Weak productivity growth is because of poor allocation of resources. To better allocate resources, dynamic firms have to get access to financing. Financing actually, I think, is key to addressing so much of the global weaknesses. So getting this balance right and innovating is really important.
Okay, so the key takeaway is the balance, right? Okay, so with that, I think the time is almost up. So I want to thank all the participants because of time. So we cannot accommodate Q&A, but feel free to talk to these insightful speakers, after the event. Okay, thank you very much.